How are you looking at the currency offset that China may resort to in response to higher tariffs?
Yeah, so right now the starting point for China on tariffs would be close to 30%, including the 10% additional tariff that's being levied. They're currently running about an average of 19.3% or so. It's not a big step forward to get to 60. I mean, all Trump has to do threaten is another 25, and we're almost there. We certainly see in that kind of environment, the PBOC may let it go, the currency go to around 7.5, 7.6. Right now, it's trying to sort of pare back the pace of depreciation, if you like. Beyond that, I think it'll depend on a couple of things. One, China itself may focus on its domestic economy and really start to pump stimulus. It's been holding back. And I think it's been holding back for a good reason, to see what Trump does and says and does. The other thing also we have to understand that Trump is also an advocate for a weaker dollar. I mean, he has explicitly said he is concerned about dollar strength versus the Japanese yen and the Chinese renminbi. So if he starts, once we get to 7.5, 7.6, and suddenly Trump realizes, what have I done? And he starts talking down the dollar, that may restrict the depreciation in the CNY. So 7.5 to 7.16, yes. But after that, I think China will probably react more aggressively on its fiscal domestic stimulus side. Plus, I think Trump may even start talking down the dollar. So that will restrict.
But is it in his hands to talk down the dollar? I mean, look at the dollar right now. The economy continues to fire on all cylinders as it is doing right now, the U.S. Can he talk down the dollar?
It's very, very difficult. I mean, naturally, there's an inconsistency here because naturally, if you implement tariffs, historically that would imply a much stronger dollar. Yeah. And so I think the reality is to talk it down is going to be very, very difficult. And I mean, there is talk potentially of trying to implement some sort of Mar-a-Lago Accord or, you know, a Plaza Accord 2 where you get central banks such as the Bank of Japan and the PBOC to actively weaken the dollar and buy up their own currencies. And that would help from a trade perspective for the U.S. But again, so as I said, there's an inconsistency in policy here. You have tariffs that would be pro-positive dollar, also fiscal expansion that generally, and U.S. growth outperformance that ends up taking place being positive for the dollar. And at the same time, you have all this talk of wanting a weaker dollar. Lighthizer, for instance, who hasn't got a formal role in the administration, admittedly, but has talked about a weaker dollar in the past. So I think there's a bit of a dichotomy here.
Look, my own view for next year on the dollar is that it's going to be a highly volatile and uncertain environment. I think we have to play the dollar pairs tactically. And I think what the markets are going to have to make a call on is how to balance the inflationary impacts of Trump's fiscal stimulus, his bid to bring manufacturing onshore, and restricting foreign supply, how to balance the inflationary impacts of that with the disinflationary impact of deregulation and lowering business costs. I mean, he's talked about lowering energy costs and so forth. How the two match up, I think that's what the markets are going to have to make a call on. And that's what's going to impact fixed income and currency markets.
I think that's a very good point because inflation has been on the minds of the U.S. consumer. That was one of the biggest topics when you look at the elections that have just happened. In fact, trade was all the way down to about number 16.
Correct.
So in reality, if inflation, because of tariffs, and we estimate that, you know, CPI or inflation could end up being up to 0.5% higher on the back of this, then clearly that could be very, very, you know, that could push back against these tariffs and it could push back on policy that's, you know, inflationary, potentially inflationary. I agree, deregulation could help, but it may not mitigate the impact, or a weaker or a stronger dollar may help as well to some extent. But, you know, even then you could see up to 0.5% hit on inflation. That could be worrying for the U.S.
And, you know, even on the fiscal side, you know, the view is that he's going to expand the deficit, and sure. But at the same time, you've got, as you mentioned, Scott Bessent, who is more of a fiscal hawk. So he would be trying to rein in the spending as much as he possibly can. And then you've also got the government spending cuts coming from Elon Musk and Vivek, Ramanathan. So how that balances out as well is going to be something that is going to, the markets are going to have to make a call, especially on the fixed income side.